Rod Kusin, Spoonman for Risk for the morning of 9/25 Wednesday. We have an automated strategy running. I wouldn't pay too much attention to it. It's for testing purposes, but in any case, we've had a little bit of difficulty this morning figuring out where our upper threshold is. Let's look at our first pivot at 8:33. Now, normally what we want to do is look at the high of the premium on the last bar prior to the pivot. The premium at that time was negative 649. The bar prior to that was at negative 617. Negative 649 was very close to where we were yesterday. And for that reason, it looked good. But as you see the market move here, and in all honesty, we did not see this coming. When the market moved up to the lower value area here, right on the money, by the way, the market shorted. The premium at that point in time was negative 618, just under the previous reading of 617 here, but much higher than the 649. So we've reestablished the upper threshold at 617. I'm not sure where the lower threshold is yet. But as the market moved into the upper value area, the lower value area once again, just read the premium here with me. Okay, we got a big buy signal here. And this high was associated with these bars on the premium above 617. And we get another bar above the 617 range here, and another couple bars here, which are just barely above 617, 616. Okay, and yet we're shorting. So is 616 the right number? Is 617 the right number? Right now, we're uncertain. So until we are a little more clear on this, I think we are best off just sitting tight, giving this another chance to bounce up and see where we see what we hit. Now, in frequently what we'll see happen here in a short is it'll keep on testing every quarter of a point below the high of the move. And we had a high here at, let's catch it here at 90.50, 90.25, 1/4 of a point lower. All right, but are we at the right level on the premium? Not quite sure about that. So we'll continue to watch. Come back in a few minutes. Well, we definitely want to get in on this. Look at these huge sell programs. Oh my goodness. Oh my goodness. We've got to jump in here. It almost seems. Just jump in and take it for a ride. But they're buying these dips. Oh my goodness. And the sell programs are being ignored. Somebody's going to get killed. All right, we're going to have to short this. All right, precautionary note here. Look at our volume. Our volume is steadily increasing here. It's steadily increasing. That's a reason for caution. Big reason for caution. Looks like what's going to happen here is that we're going to test that 92 point of control. Point of control here is at 92. Upper value area here, 91. And 91.75. Yet over here, we're at about 90 and a quarter. Overbought, overbought. And look at the premium. We're still above 617 on that last go around. I think we're going to need to go higher before we go lower. And I've elected to move our threshold to 616, negative 616. But this is a wildly volatile market here. You see two big moves down below the sell threshold level. This market is going down. There's no doubt about that. However, I don't think it's ready to really begin to move down. They're buying these dips, which is really surprising. So we should be going back up above 91. I'm saying that because we're above that threshold level. So we're not ready. But we've got an awful lot of volatility here. So risk takers beware. Well, we are just getting ourselves eaten up here. My goodness. Haven't really gotten into any trade here, and that's very troubling. Very troubling. Yeah, very interesting. Right in here, I had that move up. We were below the, or at or below the this threshold, but my goodness, these moves up that just don't make any sense. Yet we are dropping right into it. You know, I'm looking at I'm looking at a drop down to around 83. That's really what I'm looking at, around 83, to fill the hole here in the momentum, or pardon me, in the volume. It's somewhat confirmed right in here, same area. Wow. All right, we'll come back. All right, we're going to adjust that upper value area one more time. The question that we have to deal with is, what is really the highest value of the premium from which the market shorts? Okay, that's what we're looking for. Now, if you look at this pivot from the beginning of the day, like we said earlier, originally we were at around 617. We get another pivot here, right at the top, and there we're at 618, so a little less. Over here, we're at 616. then over here, we're at 603. And it pivots. But all of these other areas were less than 603. So the highest level at which it pivots is 603, presuming that we don't go any higher than this, at which point we may have to reevaluate. So for that reason, 603, whoops, I got the wrong number here, 603 becomes our new number. Sad to say, however, we've missed a lot of trading opportunities. Lots of trading opportunities. Now, incidentally, we have not established a low value or a low threshold. Have no idea where that threshold is going to be. But one thing is for sure. Come back to that. All right, let's kind of review what's happened here. It seems like our threshold level is getting to be fairly accurate. We exceeded 88.25 on that bar of the premium, which was above the 603 level. We had additional bars right in here. Well, 595, 595, another move higher. All right, so that was under. We got a little bit of a retracement on that. And then we moved up again above the 90.75 level. We've drifted below the upper threshold along the way, but it looks like we're trying to move right up to this point of control, which you can't see too well because we got our profile data here. We can adjust that so we can see that better. But I think it would make sense, since we've got increasing volume here, to let's just let this thing hopefully drift up to 92 or better, and then look to execute based on how we see what's happening with the premium. Now, in the meantime, let's look at our low threshold level. I have never seen a low threshold level established below an execution level. The sell execution level today being at -780. Let's expand this out so we can see a little better. Okay. So, despite whatever rally we may have seen take place so far today, we're very confident we're going to drop below 84.50, because these are bars of the premium that are at or below an execution level, and there is no divergence at that point. So anyway, we're saying we're going to drop below. Anyway, let's now look at where we do see some pivots. Now, we have a pivot right there at 85.25, and the low of the premium was -752. Yesterday was -754. Let's look at this pivot. Okay, above that level. These lows are above that level as well. And now we're almost above, we're very close to the fair value level. So I think that level at -754 is pretty accurate. I will readjust that to negative 752 based on that bar. And now we will revisit trying to get into this short, which I believe we are really in spite of whatever rally you see happening here. This has been a very volatile morning, very unusual pattern here. And I think what we're going to be seeing here is another marked drop in the market. We'll drop below the low of the morning. And we should be seeing a short materialize here very, very quickly. And incidentally, on the basis of the way in which the market has been behaving so far today, this to me, at this moment, looks like what I would call a blue day. So if you know anything about the color patterns of the day, that's what this is looking like. Remains to be seen, but what would be evident of this, I don't think that this is the low. It's not as low as I believe we need to go in order to get, actually it's back here. It's not as low as we need to go in order to really gain some support. By the same token, the high of the morning so far was right at the open. We've already exceeded that. So in the light of having gone above the high of the morning, all right, and this being very unlikely the low of the morning, what we should see happen here is a rapid drop back down to a new low. And then another attempt up, which, depending upon how far we get into the morning, we may not see another new high. But a blue pattern is a very volatile pattern where either one of two things happens. Either the high and the low happen in the morning, or the high and the low happen in the afternoon. And then the other side of the coin does nothing. We've had a lot of activity this morning. I predict the high and the low will be this morning, and then the afternoon will still have volatility, but will neither hit either a new high or a new low. That's my assessment, at least at this moment. All right, just continuing on in our discussion here, we've had to break away for several reasons, but I'd like to draw your attention to pattern. There is a typical pattern that the market follows, and this gets into some pretty how can I say this? I'm stumbling over my words. Pattern is not always followed, but generally speaking it is. Now, here's our analysis. Yesterday is what we would refer to as a yellow day down. Yellow day downs occur where the low of the day exceeds the low of the morning, and it looks a bit like a V, an inverted V, right? Okay, that's what we had yesterday, with the exception that the pattern did not complete. As we mentioned in our video yesterday, it didn't complete until this morning. Now, yellow days are almost always followed by green days. Almost always followed by green days. It's about 90% probable. Now, when that happens, okay, if it's a yellow day down, where the low of the afternoon exceeds the low of the morning, the following day is always a yellow, is always a green day down. Okay, it's a green day down. So in a green day down situation, depending upon where the high occurs, well, the green day down will mean that the low of the day will exceed whatever the low is of the morning. So we are yet to see the low. The low is already at 84.50. That was the low of the morning. We're going to exceed that if this is a green day down. And that low should occur today earlier in the afternoon. So this is going to be a precipitous drop. And it looks like that's already occurred. So we broke away for various other discussions that we were having with clients, but I gotta get back to this because this is really exciting. All right, now here's the thing: the market went up to 95. I was really expecting it to go up to the point of control, and the point of control was at 96, 96.50. 95 was a possibility, I suppose. Now, why might we say that? If we go back, way back here, all right, we had a strong volume area right in around between 95 to 95 and 3/4. Okay, that's 95 right there, and 95 and 3/4, all right, is right there. Okay, and this takes us back to April 18th. And you see that same number at about 95 and 3/4. Repeated again on the 22nd of May, on the 24th of June, and come the beginning of August, you know, it's up there a little bit higher, okay, right there at about 96.5, which is where the point of control came from. So I thought, yeah, 96, that's where this should be going, but it didn't. It went up to 95. All right, let's take a look at I'm going to look at a few different technical aspects to this high. Let's go back and discuss where we were at. We were talking about the upper value area at negative 603. Now that was continuing to prove to be true, right? Negative 603. Here we hit it. Negative 606. Not quite. And then we became divergent, and down she came again. All right, so we came up to, let's get it down there, negative 604. She went a little higher, and we were divergent, so we dropped again. All right, now our automated strategy starts taking buy signals. All right, be that as it may. We have this nice low here on the premium, predictive that the market is going down. All right, but what was odd, very odd about this, is that this low gets exceeded right here, and so the predictive value of that bar on the premium has already been achieved. So we need to reset. So we reset it right here, and we came down, we hit that low here at negative 1688.75. So that's now being predicted based on this relative new low on the premium, which comes almost down to the low value area. But there's no divergence here, and that's the reason we say this is predictive. Now, as we move up, all right, we start moving up into that upper value area. Right there it gets exceeded. And then, once again, we hit this high at 93.25, and we drop. But I don't think we're high enough. And normally what we're going to see happen here at the high is that the high of the premium will get very close to the upper value area, and then we'll see divergence, and then it'll drop. Today has been very abnormal, very abnormal. So we come up here, all right? We don't even make it to the upper value area, and we're at a new high at 94.25. Are we ready to take this? I'm not. I'm saying no. We gotta wait. We're not high enough yet. Man, I'm putting my foot in my mouth all morning long. Again, this thing drops. We go up just a tick or so higher, and we're way below the upper value area. And this thing comes down, but it's not done yet. It tries it again, all the way up to 95. Okay, and we're still way below the upper value area. And I'm saying to myself, oh my goodness, can that be the high? And I say no. I don't think that makes any sense. I really don't. But when we come back and we test 95 again, now here's your point. Look at the premium here, all right? Look at the premium the last time we were at 95, all right? Last time we were at 95 was negative 630. Now I'm just going to draw a trend line here so you can see this. Negative 630. Look at that trend. We hit 95 again here, and that we're practically at fair value. And that's all she wrote. So this turns out to look very much like the high of the day. I would now have to say, in retrospect, in hindsight, and it's analysis after the fact, but the interesting thing about this is that there was some fairly significant divergence in volume at that price. Let's go back here to the previous high, 1030. Look at the volume. 1030 volume here is at about, it's showing up here on this particular chart, negative 12,000 and change. Now check it out here, negative 14, okay, negative 14. Much lower volume, much lower. Big divergence here at an equal high. And then, it moves right back up to 14 and a half. And once again, the premium is still significantly below the threshold that we had talked about previously. Significantly below. I'd say that is so significant that it probably needs to be readjusted. But that having been said, you can see the divergence there. And as soon as that thing begins to drop, bam, we get some buy executions right in here, showing us that this thing is destined to be dropping. And really, if there's a green day down, which in all probability it is, regardless of what you see happening on the screen right now, this thing should be tanking, and should tank all the way down to 84 and lower. Okay, so you want to be shorting this thing, and we're late. We're late about shorting this. So maybe we can get into this short. There's still plenty of room to play. Hopefully it'll move right back up to this current point of control there at 92 and right around there. We'll look to take this short. So that's where we're at. Oh my goodness, what a day. Very difficult. But I think right now we have to re-look at our threshold. We had it there at 603. I'm going to leave it there. I'm just going to install a secondary threshold. Let's see if this makes sense. Negative 630. This is so tough, so tough. Because this is shorting at negative 655. Wow. And this is shorting, wow, at 641. So where do we put it? It's a tough call. This is a very tough call. All right, I'm going to call it at negative 641. Ugh. It's fooling us all day long here. All right, let's put in a adjusted. Okay, we should be getting a little bit higher, but the premium is just telling us, my goodness, every time we get up here and we drop below that threshold at a higher high, look at it come down. It's coming right down. We get into that higher high. Premium is just dropping off. Sell, sell, sell. Any move up, they're selling it. Oh, goodness. All right, let's hope this thing can move up just a little higher. And then maybe we will have a good opportunity to jump into this. All right, so right in there, right? As we moved up to the point of control there at 92, which was just below the upper value area on our chart here at 92.5. Look at the low on the premium. Premiums are just dropping below that secondary threshold area that we talked about. And now we're finally getting a drop. Wonderful. All right, let's just hope it doesn't come back. Again, we're forecasting that the low of the day has not yet occurred. Low of the day currently is at 84.5. We should be dropping below that yet today. All right, we've gotten a retracement back up above that upper value area. We're adding to our position. We're going to average in on this. Okay, we're taking another position on this at 93. The market moved up to 93.25. We were way above the upper threshold, and now we've dropped back below the secondary lower threshold. At 93, we want to be in. Now, actually, I'm going to step back and adjust what we said. That kind of a high on the premium that brings us up to 93.5 should actually result in this going a tad bit higher to 93.25, maybe 93.5 actually. So if you're putting in a limit order, okay, you've got 93.25. Putting in a limit order to get filled at 93.25, and if you're really fortunate at 93.5, that could work out quite well. But we should see this thing pop one more quarter of a point based on that new high on this particular bar on the premium, relative new high. That should take it up at least 1/4 of a point higher. Yeah, don't let this fool you. This thing is coming down. Okay, we've attempted 93.25 again here. You see, we're just not getting above that secondary upper value area. So it looks like we've done about as much as we can do. Although that bar, typically speaking, that bar will shoot this thing up at least 1/4 of a point. It's having a hard time doing that. But that having been said, I think we can be confident that it will. whether you're getting a fill at 93 and a quarter or 93, you're really close to where you ought to be. But this is what we're being. These are the cards we're being dealt with today. But don't be fooled. This will go down. And now you see why we say it was going to drop, and it hasn't stopped. It's going to continue. Okay, we have not yet hit the low. That's a good sized drop. And there are those out there that are saying, yeah, you called it. Well, I'm just following pattern. A little disappointed that we didn't quite get up to that point of control. But that's why reading the premium can be so useful. See, everything else told us that, yeah, that point of control made good sense. And once again, just to remind you, 84.5 was the low, and we will exceed that. Let's look at, again, how low we really are expecting this to go. We've exceeded that lower value area already, because we're at 85.75 right now. See that gap in there? That ought to get filled. So dropping the low to around 83 makes some sense. Let's see if we can verify that. All right. Now I'm going to remove this bar here because we've been there, done that. There's a volume gap area in there. We've got a dip in the volume right here, just a little bit above 83. Let's take it back a little further. Same thing occurs there. All right. Now, all that having been said, let's look at this. 78, control at 79.50. Could we drop as low as 79.50? Well, sure. The day is young. It could drop all the way down to 79.50. That's very possible. But before it does that, we need to drop this thing down to at around 83. Okay. If we don't get too much volatility today, well, 83 I think is a very respectable, realistic number for today. Now, if we hit that yet early in the day, and by that I mean early this afternoon, then perhaps we'll go ahead and be looking at 79. Because we've really had some very strong sell programs going on today. So that's entirely possible. Let's wait and reevaluate once we drop below the low of the morning, and then we'll see how fast we go down to 83. And based on the timing of the day, the low of today should be, given where the high was, the low of the day should be somewhere around 1:30ish Central Time. 1:30ish Central Time. So we got another 45 minutes to go before we fall into that time frame. Now, if we hit the low much earlier than that, then yeah, I think we could continue to plummet, getting closer to that 79 area. Now, is there anything else that we might see happen before before we hit 79.5. Let's just take a gander back here. Yeah, 80.5 is a possibility. Same true here. Yeah. Same true there. So we should be dropping into 83, below 83, 80.5, below that point of control. So we'll come back and revisit this once we're there. Very surprising move here. And we were coming very close to the low of the day, 84.75. And we get this great big buy program hits. Great big buy program. But doesn't change anything. It does not change the pattern. Now we should be getting into a new low, and that's not a new low. 84.50 was the low. We need to see that happen. So sit tight. That buy program is not going to change the market direction today. In fact, just as you got into that new high, notice how the premium dropped again. So you could look at, a possible shorting of that move, or maybe up into that high was at, let's see, 88.5. But just look at the premium alone. The premium, right when we tagged that price, dropped below that secondary level. Now the fact that it moved up almost into the upper threshold could give us reason to expect that it might go up a little higher, 88.5. But even trying to get in here at a good price, at around 88.25 to 88.5. 88.25 is where it is right now, or was. Okay, now we're back there. Okay, all right. Should be going up higher. Should be going up higher. And if we bounce into 89.25 at the lower threshold level there, point of control over here is at 89. Same here, 88.75. So really anywhere in here. Wait for the premium to drop. The highs of the premium to be below the upper threshold or the lower threshold. The secondary low would make for a real nice opportunity to short that move. We're looking at a short here. And she'll take it right back down. Right back down. What you see happening right now is where the short should materialize. Right now as we speak. Because that little move up, look at where the premium was. It was even below the secondary upper threshold. That is short. Now you get a couple of things that are slightly conflicting with that. We are already at, maybe I spoke too soon. We are already at the lower level of this move on our modified RSI. That's a little dangerous, actually. This is a little dangerous to be taking the short right there based on the indicator. Looking at where the premium is. Premium says, yeah, that's short. The indicator, however, says it might be better to wait. It might be better to wait. Let that thing move up to maybe 89 and a half. Pardon me, 89 and a quarter. Based on that indicator. But this can just as easily turn down as it can turn up. Reading the raw premium right in here. Premium says, yeah, there's your short. Indicator says, maybe not. But now you see what's happening. All right, just exactly what we said. That's not a good. That's not a good place to be on the indicator, because it can just as easily turn up as it can turn down. Right. The ticky is moving up. I'm not too concerned about the ticky. All right, we'll come back. Well, let's continue to examine that. This hasn't changed the direction. But the fact that we moved up to 89.75, all right, 89.75. Now, if you're going to add to this position, you're going to want to add to it at 89.75, or maybe even 89.90. Again, that strong move up on the premium here to a new high. And I'm saying that's a strong move up because it's higher than what our upper threshold level is. So normally what we would see happen at this point is that we will test 89.75, maybe go to 89.90. And then look for the divergence on the premium. So as we talk about trading right in this area, having taken a position already, but having seen where this bar of the premium says we should be going, it may be worthwhile. It may be worthwhile putting in a very tight stop, above that area at 89, say 90 and a quarter. 90 and a quarter would be a good place for a stop there. I don't think we'll see it go that high. And then, being that you're in profits, even off of these shorts right in here, it's kind of a coin flip. Premium says we're going to go back up. Okay, premium says we're going back up. So, conservative trader would exit this trade and wait to re-enter a short. Because the premium says we're going back up. So we were premature. And just fortunately have an opportunity to exit this trade without much of a, well, really without any kind of a loss. And conservatively, that would be the proper move, based on what we just saw happen. Expect this to go back up. Now, if that means that if, for example, this failed to come back up to 89.75, and it just continued to drop, and we've seen that happen today. Oh my goodness, it's been a little scary. It's been a little scary, but you didn't lose anything on the trade. A risk taker would stay in the trade because by pattern, we haven't hit the low. That low is yet to come. So risk taker, yeah, hold the trade. And look to get into that trade again if we go above 89.75. Very conservative trader would exit because of what the premium says is going to happen. But what we have seen happen today, and as you see it happening right now, even though that bar on the premium went way up there, this thing is coming right back down. My goodness. It's been a tough day. Been a tough day. But, wow, very interesting, nevertheless. Well, come back. We're going to add just a little bit into our equation today just to explain this bit of a move. Now we're going to extract out of the Tiki feed what turns out to be a 28 on the Tiki that happened at 12.55 in conjunction with that new high on the premium. Now that usually means that, of course, the high is yet to occur, but we're in a down pattern. That high on the Tiki, if it pardon me, if it was a 30 on the Tiki, I think it would be a game changer. But that high on the Tiki is enough to have caused this rally to occur, but not enough that, in my estimation, this would have changed the pattern. The pattern is yet to be completed. So we've got this strong move up. This is true 28, positive 28 on the Tiki, usually associated with a subsequent high, but relative high, not one that's going to hit a new high of the day. I really don't think that changed the market direction. It suffice to say, it shouldn't have. It should not have changed our direction here. We should still see the low of the day. The fact that we came off of 1/4 of a point, that's now we're supposedly hitting another 28. One of the two is wrong. That's next to impossible to see 228s hit on the same day within the same hour. That's ridiculous. That's why we don't usually pay too much attention to the Tiki, because the TradeStation does not give us an accurate Tiki feed. But it was worthwhile at least taking a look at, just in case we had hit a 28. But now I'm going to tell you, one of these two is not true. Likely this was. The first one likely was a true 28, because we had such a good spike on the premium at that time. So if we were in that short here that we talked about, yeah, we got to be practical about the matter. Pattern says we should be going back down, but now any long trade right now is really at risk of getting stopped out, and we would have to reevaluate getting into another short trade. But right now, I'd say, yeah, the shorts are in jeopardy, because we've got, let's look at this close. All right, right now is where we should be creeping right down into the low of the afternoon. Within the next 10 minutes, that should be happening. So I'm going to go with pattern right now. I'm going to go with pattern. Lots of volatility going on today. So yeah, we got a question, where we were at here at the time. We're right back to where we were before. And looking at the premium again, I'm just going to look at the premium. All right, premium says we're dropping, and we've had lower lows on the premium. Since that move up. Let's just throw one of our indicators on here just to show you what I mean. 1256. Let's see how the trend of the premium is down despite this move up. Trend of the premium is down. Now we did go a little bit lower. We're just above the lower threshold. As it frequently happens, market will respond to that, but I just don't see this. I don't see this thing changing market direction. Not at this point. Now, I could be wrong. Of course I could be wrong. But I don't see that happening. We've got too much time to hit the low of the day, in spite of all this volatility, in spite of a 220, supposedly 228s on the ticky. That makes no sense. I'm going to stick with pattern. And we'll come back. Okay, right up to where we were before. Okay, let's look at the premium. Okay, we can expect a I would say we can expect that will test that level again. Let me see. No, okay, I take that back. Now I can see a little bit better. This high on the SPOOs associated with this high on the premium below the secondary upper threshold. Yeah. Now that would be the kind of pattern you would expect to see on a short. Yeah, that's short here. It's been a volatile, very, very volatile day. But that's short, my good friends, that's short. So just to identify that point, let's we call that short. That's what you want to see happening with the premium. All right. You want to see that happen with the premium. You want to see your indicators all in agreement. Now, one little, that's also a range bar. That's a range bar. Expect the market to come back to at least 90. Sorry to say, but that's a range bar. We get a range bar over here, we get a range bar here. So expecting that to come back up to 90 would be consistent with our indicators, although at the moment that's short, according to the premium. Goofy day. We called attention to the range bar here with an expectation of retracement back to 89. That certainly did happen. We're still short, my friend. We're still short. Went up to 89.50. And there's divergence there as it came up to 89.50. So even though the high was just a little bit higher than the threshold, if you wanted to be real technical, you might want to wait to test 89.50 again. But really, I don't see us changing direction here. Volume, on the other hand, is increasing. So we could go up to maybe 89.75 even, in that vicinity, and still be short. Okay, we're going to revisit what's going on here. Now, we've been saying that this market is short. Now, what you see happening right now, okay, may appear to be defying all of the indications of what the market should be doing. And to some extent, it is defying what the market should be doing. But make no mistake, the pattern is not completed. All right, so we take it up to 91. We see, all right, let's just look at where we are here. This day is not over, okay? 91 over here, okay, we're on this screen, 91. Over here, 91 and a half. Now we have 92 at this point of control. Now, premium says we should go higher. Okay, so 91. 91 it is. Let's see that happen. And if we hit 91, guess what? $91 should be short. Okay, see if that, okay, there we have it. Lower than the secondary lower threshold. Now we see volume really trying to push this up a bit more. I appreciate that. And could we go up to 92? Sure. Could we go up to 91 and a half? Sure. Big move like that on the premium, that's usually going to be good for 2 to 3 ticks. Okay, 2 to 3 ticks above that level. And since we were at 90.75, just taking it up to 91, that really doesn't make a lot of sense. No, that's usually going to be good for 2 to 3 ticks. So I'll back off of 91 and just say 91 and a quarter to 91 and a half really does make more sense based on how powerful a move that was on the premium. But conditionally, that having been said, you ran right up here to a upper value area with a divergence on the premium. So at 91, the premium said we should be dropping. And now you see it happening. But that having been said, in all fairness to the premium, big spikes up like that usually are good for at least 2 to 3 ticks, typically. The day is not over. I know you're saying, well, wait a minute, the trend is up. I don't deny that. At the moment, it is. At the moment, the trend is up. And you can confirm that on our indicator right here, right? That trend is up. Even on our much slower indicator, the trend is up. So really, since this low occurred this afternoon at about roughly 1:30, the trend has been up, but the pattern is down. And that's what makes this so difficult at times. If you were holding a short, from the high of the day, yeah, you'd be shaking in your boots right now. But pattern says we will hit another low yet today. And there we go again. Yeah, I know. This is tough, guys. This is very tough. It sort of defies what common sense would dictate. But, huh. I have to laugh. I really do, because this is mind-bogglingly difficult for the typical trader to figure out. And make no mistake, it's not easy on me either. But everything else that we work with, suggests these calls are accurate. So, anyway, low for the day, yet to be expected. Now, I think we're, let's see, let's check our time here. Yeah, normally we should have already hit the low. But the fact that we didn't hit the low as of yet just means it's yet to come, making this a late afternoon low compared to when we would typically expect it to occur. So do I expect it to go below 84.5? Yes. But at the rate we're going, unless we get some really big sell signals hitting within the next half hour, we may not see a whole lot more than that. But of course, we're dropping very quickly by the same token. So, stare in amazement. Well, we're picking this up just into the very last few minutes of the day. We have 7 minutes to go, and we have 2 points to drop. And that's what we expect. We should be getting some further sell programs kicking off here momentarily in order to bring this down as quickly as we expect it to. Sometimes you can judge between the approximate period of time between signals. Let's expand this out. All right, you've got a signal here that took place 11:22. And then we have another one that takes place here. Let's get that lined up. 12:31. All right. So almost an hour. Almost an hour. Now we have another one that takes place between 12:31 and this is almost a bona fide signal. That took about 40 minutes. So there should have been another one about 40 minutes after this, so right around 13:50. But there isn't. Okay, so the next one that occurs took a lot longer. Okay, from 13:09 14:22, more than an hour. But I would suspect that from this point here, all right, let's see, 12:30, "40 minutes later, yeah, looks like this is probably not going to tank until right around the close, and then we'll see a more precipitous drop. Because for those sell programs to hit at this point would be somewhat premature based on the behavior of the day, but doesn't change the fact that we expect this to continue to drop. So we'll come back. All right, we're right at the close here. Premium has jumped up a bit, but I wouldn't put too much stock into that right now. The day is not over. The market is now closed. Granted, we have not quite gotten to the 84.5 mark as we had previously discussed, but I can assure you we will. We will. So we're not going to stop this video here. We're going to come back and resume this after the market reopens. Now, if it doesn't hit 84 here within the next half hour roughly, we'll probably suspend this video for today. But the pattern doesn't change. All of the indications were that this market should drop below, and we hold to that based upon all of the evidence, the patterns, and so on. So we don't apologize if it doesn't occur. You've got to have rules in order to trade successfully, and these are the rules. So that having been said, we'll revisit this in just a few minutes, and we'll conclude our video then very shortly thereafter. Okay, well, we've given this enough time, and we're going to conclude this video right now. We are looking for the 84.50 low to be exceeded. Now, as sometimes happens, the low does not occur until the pre-market activity sometime overnight or early tomorrow. But as we're expecting another short day tomorrow, I can say with very high confidence that 84.50 level ought to be exceeded. and by at least several points. So that's our call for tomorrow, nevertheless. And this is Rod Kusin and Spooman for Risk.